Hey RGV business owners, today I want to expand on a couple of tips we gave for maximizing your medical expense deduction. So the two strategies were to use HSAs to pay for non-deductible medical expenses. And the second strategy was to maximize or accelerate income to maximize excess medical expenses. So I want to provide a couple of caveats and qualifications to why and how these two strategies work. So the first strategy, to use your HSA to pay for non-deductible medical expenses. So there's a couple of underlying assumptions. The first underlying assumption is that you have enough, or you feel confident you have a big enough HSA balance to pay for current non-deductible medical expenses and future medical expenses. So what do I mean by that? So remember, an HSA is triple tax free. So you get a tax deduction for the contribution. You can invest that money. The earnings grow tax free if you use the funds for qualified medical expenses. So generally speaking, a lot of people recommend to wait till later to maximize the tax-free growth to use HSAs. But if you feel like you have a big enough HSA balance to pay for any medical expenses in the future, you might want to consider using your HSA to pay for non-deductible medical expenses currently. So what do I mean by non-deductible medical expenses? Well, in 2020, you can write off medical expenses in excess of 10% of your AGI. Okay, a couple of caveats around that. So in order to be able to use the medical expense deduction, you have to be able to itemize. So with the increased standard deduction, there are a lot fewer people that are actually able to itemize. So that's one caveat. The second caveat is the 10% hurdle. So what do I mean by that? Let's say your AGI is $200,000. And when I say AGI, I mean adjusted gross income. Let's say your adjusted gross income is $200,000. The first $20,000 of medical expenses are not deductible. Only medical expenses in excess of $20,000 in this example would be deductible. So if you're a high income earner, you need a lot of medical expenses. So you might not be able to deduct medical expenses, and that's where using an HSA to pay for non-deductible medical expenses might make sense. The second strategy, accelerating income into a year where your medical deductions exceed your adjusted gross income. This also has a couple of caveats. So what do I mean by accelerating income? Well, many of you are business owners. So maybe you invoice a client this year instead of trying to put it off to next year because you have excess medical deductions. Maybe you convert a traditional IRA to a Roth IRA to soak up the excess medical deductions. So why do you want to soak up these excess medical deductions or excess medical expenses? Well, because the medical expenses, unlike some other deductions, cannot be carried forward to future years. So if you don't write off your medical expenses in the current year, you're not going to be able to write them off in future years. So the reason why I say this has a couple of caveats is because, well, you're realistically, your AGI, your adjusted gross income, probably has to be pretty low for your medical expenses to be more than your AGI. Either that or your medical expenses got to be pretty high. I know you might be thinking, well, I'm a business owner, my income's pretty high, I doubt that'll ever happen to me. Well, some business owners have unpredictable cash flow streams, variable income, and so maybe you have you're operating at a loss, and so your AGI is a little bit lower. It's kind of the perfect storm where you have a low income year and you have a high medical expense year. So let me give you a quick example to put some numbers around it. Let's say you have $50,000 of medical expenses in one year and your AGI is only $25,000. So now you have $25,000 of excess medical expenses. So maybe you might want to consider converting $25,000 from your traditional IRA to a Roth IRA, and the medical expenses will offset the income you realize from the traditional IRA conversion. I hope this was helpful. If you have any questions, feel free to reach out. Thanks for tuning in. That's our 2 cents on your dollars.